consecutive record close on the JSE last week, driven by a rally in banks, mining and gold. But the main catalyst will be the central bank rate decisions this week. Good morning to Morning Live viewers. This is Bottom Line. My name is Tepo Mwai. This is what we do every Monday morning. We look at some of the highlights of the previous week in the financial markets and what lies ahead as we start a brand new week. So what are some of the highlights last week? First, well, the JSE joined global stocks rally with the all-share index registering another record close on Friday. We entered a fresh high of 104,458, up 0.5% on the day. So what are some of the sectors that have been doing the heavy lifting on the JSE? Well, financial, mining and resources index were the best performers, advancing more than 0.7%. We had also results from First Rand and a Discovery there. Discovery's share price was down despite the companies announcing annual results. First Rand's price also rallied after the group posted a 10% increase in annual headline earnings per share. What to expect this week? Several central banks have interest rate decisions scheduled for this week. On Thursday, the South African Reserve Bank is expected widely to keep rates unchanged, with the repo rate remaining at 7%. In Nigeria, the central bank is also expected to pause at 27.5%, while the Bank of Ghana is expected to continue with its easing cycle from the current 25%. In the US, market analysts widely anticipate that the Federal Reserve will cut benchmark interest rates by 25 basis points. We also have local inflation numbers and retail sales numbers out this week. Will the rand strength continue? We'll see this week, currently trading at around 17.36 to the US dollar. Well, for now, we turn our focus on trading. Thousands of South Africans who have traded or invested in crypto assets may soon face severe penalties. The South African Revenue Service has started issuing letters to individuals suspected of undeclared crypto gains. Experts warn that those who fail to act now risk not hefty fines, but also potential criminal prosecution. For more, we are joined in studio by Vehan Olofi. He is with Forvest Mazar, South Africa. Thank you very much for joining us so early in the morning.
Thanks so much for having me.
For those who are not familiar with the crypto market, just tell us a little bit about the cryptocurrencies and what are they used for?
Yeah, so blockchain-based digital assets are effectively used for a variety of reasons. It was initially designed to facilitate peer-to-peer payments over the internet without that need for an intermediary, but it's since then evolved into a speculative asset class as well, and therefore a lot of people look at it as a store of value. Therefore, there's the prominent cryptocurrencies, those of course the likes of Bitcoin, Ether, and of course in addition to that there's massive amounts of alternative coins. And of course, we see this evolution of real-world assets, tokenization of real-world assets as well, playing a significant role in the world, in the global financial economy.
Well, recent data suggests that a number of South Africans who are participating in this market have not been declaring their gains and some of them their losses to the Revenue Service.
Yeah, so I think the reason for that is effectively twofold. So you've got this new asset class that's being dropped into various laws and regulations, including the South African Income Tax Act. And that effectively means that the law wasn't designed for the asset class per se. So to complicate the matters even further now, there hasn't been any changes in the legislation from an income tax perspective to specifically say this is how you would tax blockchain-based digital assets based on its various intricacies. What we've seen is merely two definitions being added to the Income Tax Act. I mean, in addition to that, there hasn't been any authoritative guidance from SARS specifically saying to us how this asset class is taxed in unique situations. And I think to build onto that, the second element that you need to take into account is the fact that it was designed, as I mentioned, to facilitate these peer-to-peer payments over the internet without a need for an intermediary. And that without a need for an intermediary is where it becomes fundamental, because a lot of people believe that the asset class itself was designed to operate outside of the traditional financial services world and, of course, operate outside of the laws and regulations. And therefore, there's a lot of misconceptions in terms of people believing that the asset class shouldn't be subjected to tax, which, of course, is completely false.
So with that bit of uncertainty, how do those who are in this market navigate that?
Yeah, so there's various ways to navigate that. Of course, the most important is to engage with professionals that understand the industry as well. The issue that we find currently is that there's a lot of South Africans that are not declaring their income in terms of cryptocurrency gains and losses, and it's not something unique just to South Africa. We see this across the world. Now, of course, there are elements of SARS expanding their capabilities to try and catch as much of this income as possible within their tax net. But effectively, what still remains the issue, there's a significant amount of people that have underdeclared their taxes for a vast number of years, and that effectively is where the voluntary disclosure program comes in, the VDP process, where individuals actually has the opportunity to regularize their tax affairs. So they would go to a professional such as Forbes Mazars and sit down on cards on the cap table, enter into a legal agreement with SARS to regularize all of their tax affairs to avoid those significant fines and penalties and even prosecutions, as you mentioned.
So voluntary disclosure is the way to go if you have not declared your gains?
Yeah, for sure. Because SARS, is important to understand, they are strengthening their capabilities. They are looking at tools to cast the net as far and wide as possible. I mean, we are operating in a regulated environment where crypto asset service providers are regulated in South Africa. That means the institutions such as SARS have a regulatory overreach over those crypto asset service providers. So information can be shared on a granular level. In addition to that, utilizing the data on the blockchains, of course, which is immutable. They can use all of this to identify individuals that have not been declaring their taxes. And it's extremely important to note that there's this element of this misconception where people believe that SARS will only go back 5 years. SARS will go back as far as possible if they have an idea that you have been underestimating your taxes, and therefore utilize these tools to look back as far as possible as they can.
Well, I'm afraid we have to leave it there. Thank you very much for your time. That's Olivier, Wynand Olivier, rather. He's with Forbes Mazars, South Africa, on our Traders Corner. And remember to join us again next week here on Morning Live. This is Bottom Line, and Morning Live continues.